The stock market is going through a big change again. People thought inflation was getting worse, but that wasn't true. That means the stock market might not be worth as much as people thought. The powerful rally that began in mid-June turned out to be a trap. People who bought stocks because they thought the Fed would be nice have been proven wrong. Anyone who hedged their positions early in August is likely happy. Doing so now is often too expensive. It's hard to know what happens next ahead of the September 21st conclusion of the Fed's rate-setting committee meeting. Investors are debating if rates will rise 0.5 point or 3/4. The bank will also release a summary of economic projections, which will offer insight into the Fed governor's views on the future of economic growth, unemployment, and inflation. There is a downturn in the market, and some people think that this means that bonds are a better investment than stocks. Many people had never known a time when there was an alternative to stocks. But some people think that this might not be the case. They look at data that suggests there are still good opportunities in the stock market, even if things like the Fed's plans to reduce its balance sheet make it harder to predict what will happen in the markets. Most people should probably wait and see what happens. But options-savvy investors know that an elevated VIX can create opportunities. When the VIX is high, it's time to buy stocks. When the VIX is high, investors start to panic. Some people are buying expensive put options to protect their stocks. This is an excellent opportunity for long-term investors who can manage options positions. Long-term investors should identify the stocks they want to own more of and those worth buying. They should also consider selling cash-secured puts that expire in about a month to buy the stocks at 10% or so below the market price. If you think the wealthy will keep spending and traveling even if the economy goes down, you can buy a stock for $152.25 that will let you sell a put for $2.15. If the stock is worth more than $135 at the end of October, you get to keep the money from selling the put. If the stock is worth less than $135 at the end of October, you can buy it for $132.85, the strike price minus the premium. This type of trading is only for investors who can keep their positions for 3 to 5 years. This time should be enough for the world's many problems to work out. If not, we will all have deeper issues than losing money on blue-chip stocks. Stay tuned with us and check back for more information by subscribing to this channel, and don't forget to turn on the bell notifications.